Welcome to my outlook and predictions for 2025. Today, we're going to talk about oil and the oil price. The development of the oil price will be one of the most important factors of 2025. It'll determine where the stock markets will go, where the currencies will go, where inflation will go, geopolitical implications, all this wrapped up in the price of one commodity, oil. And the most important thing, the deciding moment for the oil price in 2025 is coming up in the first quarter of 2025. So let's get right to it by looking back to 2024 and get a look at the charts. 2024 was a really disappointing year for the oil price. As you can see, we started the year out around 70, and that's basically where we are now, flat, which is not what people were hoping for looking back at the past 2 years. So for 3 years now, we have been in a significant downturn in the oil markets. And as you can see now, we are getting and running into the end of this declining triangle formation, which is based on the long-term downtrend that has been in place since 2022 and this horizontal support zone, which if we go to the weekly, you will see it goes all the way back to 2006. This is a really important support zone, and it has held up very well in the past, well, it's almost 4 years now, since 2021. So every time, once we broke above it and we went back into it, here, you can count this if you want, definitely here, and then we had a series of pushbacks into the support zone that all held up, were successful, and prevented the oil price from declining. But now, as you can see, we are getting to the tippy top of this triangle formation, and that means a breakout is coming, either above the downtrend, which would be bullish, or below the support zone, which would be very bearish, because as you can see below it, we have pretty much an air pocket with a slight support zone around 53, 54 to about $50 per barrel, but that probably should be just one quick stop, all the way down to about $40 a barrel. This is what's looming on the horizon. And the crazy and fascinating thing is that, look at this, the very top of this triangle formation will be at the end of the first quarter. So this is when we will get the decision, at the latest, where the oil price will move. And as you have seen, these are two, it's a long-term downtrend, an ultra long-term support zone. So that means whatever break we get, it's going to be significant. So let's jump into the presentation. Here we go. So we have two scenarios. Let's start with 2025. What are the factors and the possible events for a decrease in oil price? So we go lower. Well, first we have the Trump pump. Trump wants to increase oil production. Obviously, that's bearish for the oil price. We have the economic declines in Europe and China, and maybe it'll happen in the US as well. People are spending like crazy on credit. When is the limit reached? We have the chart, the technical situation that I showed you before. A breakdown below the critical support zone would be a major sell signal. And I emphasize the word major. If you get a breakdown of a support zone of the magnitude of this yellow support zone, that's massive. And look what happened the last time we broke below it. We went right to the 40. We went back at it, couldn't break it, down, hovered around, tried to break out, went right back to the 40. This here's the COVID crash. We can cross this out, right? This is why the 40 is a really good support zone. But you can see, or look how fast we recovered once we bounced off the support zone. This is a big air pocket here in the middle. That means if we break down, things are going to go down fast. So this next point, extremely important, very underrated, and you rarely hear it when you see the experts talking on CNBC or you read the Wall Street Journal or the major economic news outlets. Oil is a geopolitical weapon. If you want to understand where the oil price goes, you have to keep this in mind. The West is using the oil price as a geopolitical weapon against Russia in the Russia-Ukraine war and the new East-West conflict that is happening. They have no interest in a higher oil price. Remember, Biden starting to sell off the strategic reserves. By the way, gotta hand it to him. One of the most brilliant trades ever. When you look at the price where he sold it and where the oil price is now. They want to keep the oil price lower. The lower, the better. Now, it can't get too low because otherwise that'll hurt the important and powerful oil industry in the US in the long run. But they can definitely push it down a little bit for a certain period of time to hurt the Russian economy. A declining oil price would be great in the fight against inflation. This is very important. Trump wants to lower interest rates. What does he need for lower interest rates? He needs lower inflation. Then the Fed will be willing to cut interest rates. What helps him the most of the things that he can control short term? Because housing prices, for example, if they would go down, if rent would go down further, that would be great. But those are factors that take time. Of the components that the government can influence and that have an immediate impact on inflation, the oil price is the number one thing. So it's actually in the interest of the Trump government to have a lower oil price. We'll get lots of news about autonomous driving, and that will be bad for the sentiment of oil because it'll be bad for traditional cars. Energy is a loser in the passive investment boom. It's because the energy sector is too small. The weight is too small in the ETFs for the S&P 500, for example, to profit from the passive inflows. So that money goes straight into big tech. We have a bad sentiment against oil. Now, this is a great contraindicator, that's true. But matter of the fact is, this will not change until we get some major signals, and it'll also reinforce short positions if we go down. OPEC Plus could stop the voluntary production restrictions. Remember, OPEC Plus, the restrictions are not mandatory, they are voluntary. So if one or two countries start to say, you know what, we need to increase our production because the prices are coming down or we need more income, then that could happen. That would be bad for oil. Now, what would be good for oil? What would lead to an increase in oil prices? A geopolitical escalation and your crisis. To be fair, we have seen pretty terrible geopolitical developments in 2024. Russia, Ukraine, and then obviously the Middle East, the Israel, Hamas war that's going on, there's not much escalation. We have a civil war in Syria, government collapsed. I mean, if you those components alone, those developments alone in the Middle East, if they would have happened in 20 or 21, oil would be at $100 to $120 per barrel each. But it doesn't. What does that tell us? Well, two things. The Middle East is losing its importance in the oil market. The reason being, the US has now become the biggest oil producer in the world. Second point is, it's not that important anymore. So really the only escalation in the Middle East would be a full-out war, Israel against everybody. Thankfully, that's highly unlikely to happen. Or Israel would start to bomb the nuclear facilities in Iran. Other than that, I do not see any geopolitical escalations on the level of the Israel-Hamas war, Russia-Ukraine war, and the civil war in Syria that would be a next level to what we saw in 2024. So, let's talk about nature. Massive hurricane season in the Gulf of Mexico in the summer, obviously dangerous. You don't want to hold short positions going into the hurricane season at any time of the year in oil, but that could lead to an increase in oil prices. The chart, we talked about it, break out above the long-term downtrend. That would be massive. This has been in place since 2022 for 3 years now. We break above it, we confirm, we get some momentum behind us. Yes, then very much it could lead to an increase in oil prices. China, the economic stimulus starts to work. Hallelujah. And we see economic improvements in China. That would definitely positively affect the oil price. Fundamentally, oil and oil stocks are cheap, no doubt about it. If you adjust it for inflation, the oil price is about 40% undervalued at the current moment, but it doesn't matter, right? The sentiment is down. Oil is a geopolitical weapon right now. The fundamentals don't play a role right now, but they will start to play a role if oil breaks out, because then people start to look at oil and say, oil is breaking out and it's cheap. And that'll get investors in. We already talked about the chart and the major buy signal with the downtrend. So, how do I plan to play the oil market and what's my prediction? First off, the most important thing is the word plan. I plan to play. I'm not a financial advisor. I'm not your financial advisor. This is not financial advice. This is just my humble opinion about what can happen in the future, which is a prediction. I'm not Harry Potter. I wish I was, but I'm not. Nobody can predict the future. So this is what I plan to do. Things change, especially in the oil market, especially with the geopolitical use that oil has. On January 20th, Trump becomes president. That'll change everything. What I'm saying today, what I'm planning to do, might change in a few weeks. So please do your own homework, make your own decisions. But this is how I plan to play the oil market based on today. We have the option for swing trades in oil, to the long side or the short side. That leads to the prediction. Wilhelmi, what's your prediction for the oil price? I don't have a prediction. Shock horror. Why is that? And that's actually the most important part to understand. There are markets where you cannot have a prediction, and you shouldn't have a prediction because it's not visible in the fundamentals or in the technicals in the charts. Right now, it's pretty much a 50-50 situation, as you can see. It can break out to the upside, it can break down to the downside. Either option is possible. The only thing that we do know is that the decision is coming at the end of the first quarter, which is fine. That's what we need to know. Why? Because now we can be a fast second. And this is the type of situation here in the oil market that's important. We want to be a fast second. So that means swing trades on the long side if we break the downtrend and go up. Swing trades on the short side if we break down and start hitting the air pocket, 50, stop, 40 as the target zone. The winner of the Trump pump, I want to be long the oil service companies, pipelines, equipment companies, because they will be the big winners of the increase in oil production in the US through the Trump pump. The oil companies themselves, they'll be the long-term winners because they will get access to more oil fields, but short-term, because the oil price might decline as a result of the Trump pump, they might have to suffer short-term, but they will benefit long-term. So I want to buy the big oil producers who also are a great dividend play in potential sell-offs in the oil stocks. That is my playbook for 2025 for the oil market. It's going to be super interesting in the first quarter. You want to have the developments of the oil price on your screen every day of 2025 because the oil price will be major influence on everything else that will happen in the stock market in 2025. I wish you all the best for 2025. Health, most important. That's more important than any gains in the stock market. Talk to you later. Bye-bye.